Today we have breaking news. FHA just banned non-permanent residents. Here's what it means for you, for me, and for all of us. Welcome back to American Money 101, where we break down the financial news that impacts your wallet. Recently, we got a major housing market update that could affect tens of thousands of potential home buyers. The U.S. Department of Housing and Urban Development, or HUD, announced a policy change that blocks non-permanent residents from getting FHA-insured mortgages. Stick around so we can answer what this means for home buyers, the housing market, and why I am so critical of this update. Let's break it all down, starting now. The big announcement. So as of March 26, 2025, HUD has ruled that non-permanent residents will no longer qualify for FHA-insured mortgages. This new policy takes effect on May 25th, 2025, and it could change homeownership opportunities for tens of thousands of immigrants in the U.S. for years and years to come. Now, to understand what's really going on, let's look at what the policy used to be and what it's changing into. So what was the previous policy? Well, before this policy shift, non-permanent residents could qualify for FHA loans under specific conditions. Here's what was required before the recent guideline change. Number one, proof of lawful residency. Borrowers needed documentation proving they were legally allowed to live in the U.S. Number two, valid work authorization. They needed a work visa or an employment authorization document issued by the U.S. Citizenship and Immigration Services. Number three, a social security number. Just like U.S. citizens, non-permanent residents had to provide a social security number. Number four, primary residence. The home had to be their main place of living, not an investment property. Number five, standard financial requirements. They still had to meet credit, income, and debt-to-income ratio criteria. These guidelines meant that many immigrants with steady jobs and a legal presence in the U.S. could buy homes with FHA loans, which offer lower down payments and flexible credit requirements. Now let's talk about the new policy. So what's changed? Well, as of March 26, 2025, HUD announced that non-permanent residents will no longer be eligible for FHA loans, period. So this includes workers on visas, including H-1B and L-1, and other temporary work visas. It also includes those with only an employment authorization card, those who have a documented right to work and pay United States income tax are no longer eligible. It also includes DACA recipients or dreamers, even if they've been in the U.S. nearly all of their life. It also includes pending asylum seekers. Those waiting for approval won't be able to get FHA loans. So why did HUD make this change? The claim is that non-permanent residency creates too much uncertainty, meaning people might leave the country or get deported before paying off their mortgages. Now, critics argue that this decision will hurt immigrant families who have been working and paying taxes in the U.S. for years. So how does this affect non-permanent residents? This policy shift will hit tens of thousands of aspiring homeowners hard, and here's why. Firstly, there's going to be fewer homeownership opportunities. FHA loans were one of the most accessible mortgage options for non-permanent residents. Without them, buying a home just became much harder. In fact, over 90% of non-permanent resident mortgages were originated with an FHA loan. There's also going to be higher financial barriers. Other loan options typically require bigger down payments, higher credit scores, and tougher approval standards. Thirdly, it's going to cause increased uncertainty. Many non-permanent residents had been saving for years, planning for homeownership. This policy could shatter those dreams overnight. Finally, there's also going to be uncertainty with other loan programs. There's also a lot of uncertainty with Fannie Mae and Freddie Mac. When it comes to government compliance in the past, Fannie and Freddie have always aligned their guidelines to reconcile with FHA. So it is certainly possible that they could also make this same declaration in the months to come. For families and individuals who are close to buying, this is a massive setback. Now let's talk about the impact on the U.S. housing market. This change doesn't just affect prospective home buyers, it also shakes up the entire housing market. There is going to be lower demand for entry-level homes because many non-permanent residents buy starter homes. Without FHA loans, fewer people can afford them, which could slow price growth in this segment. There will be more pressure on the rental market. Fewer buyers means more renters, which could push rental prices even higher. There's also going to be a substantial amount of market uncertainty. When policies change suddenly, it creates instability for sellers, realtors, and lenders. Real estate experts also warn that this could lead to unintended consequences, such as an increased wealth gap between U.S. citizens and non-permanent residents. Here's what concerns me about this policy change. As a mortgage banker, this is a very personal topic for me. So many second and third generation American citizens take homeownership for granted, and a lot of them don't even believe in America or the American dream. But immigrants still do. I have had the privilege of helping hundreds of immigrants over the past 10 years purchase homes here in the United States. And they're some of the most decent, hardworking, appreciative people out there. They believe in America, and they are also trying to invest in America and their families. When people say the American dream is dead, I say go talk to an immigrant and they will tell you it's not. So here are my concerns. First, let's talk about the misleading headlines. There's a lot of misinformation floating around right now. Many headlines are saying illegal immigrants can no longer buy homes with an FHA mortgage. But let's be real. Illegal immigrants were never able to buy in the first place. Only lawful, documented, non-permanent residents with a work permit and a social security number could qualify before. So this policy isn't stopping about something that was never happening. It's about shutting the door on people who are playing by the rules. Second, we're pushing away the people who are actually invested in America. The folks affected by this aren't undocumented or off the grid. They are legal, tax-paying, working individuals who are trying to build a life here. They've got work permits, pay into Social Security, Medicare, and pay federal income tax. They contribute to their local economies, but now we're telling them that they aren't American enough to buy a home, and that's just wrong. These are exactly the kind of people we should be encouraging to stay, to buy homes and build communities with. I understand the immigration crisis and why it's such a big concern, but we are penalizing the wrong people. Third, this robs immigrants of hope and opportunity. Owning a home isn't just about having a place to live, it's about financial security and belief in the American dream. Many of these individuals have been saving for years, planning to buy a home using an FHA loan because of its loan down payment accessibility. Now, the opportunity is gone. What do they believe in now? If we make homeownership impossible for them, we're telling them no matter how hard they work, they'll never truly belong. And they won't get the opportunity that so many of our ancestors who were also immigrants got. Fourth, this could have a negative economic impact. Let's talk about the ripple effect. Non-permanent residents are active participants in the economy. Up until now, they buy homes, pay property taxes, support local businesses, and help stabilize communities. If you shut them out of homeownership, you could reduce housing demand, lower property values in some areas, and even slow economic growth in places where immigrant workers are a major part of the local economy. When this happens, everyone pays, including United States citizens and permanent residents. Fifth, it also creates a double standard in lending. Here's something that doesn't sit right with me. FHA loans are supposed to help people who need an easier path to homeownership. Non-permanent residents already had to meet strict eligibility criteria, like having a job, a work permit, and a social security number. They needed to have a sufficient credit score, means for a down payment, and acceptable debt ratios. But what about the millions of non-permanent residents that have already purchased a home with an FHA mortgage? The risk is already out there. If prospective non-permanent residents meet the same financial qualifications as U.S. citizens and non-permanent residents who have purchased in the past, why shouldn't they have the same access? This is why I believe this decision deserves more scrutiny and a real conversation about what it means to the future of American homeownership and how all of us, including U.S. citizens, permanent residents, immigrants, and non-permanent residents, are impacted. Now let's talk about some alternatives and some possible solutions. So what are the alternatives? If you're a non-permanent resident looking to buy a home, here are some other options to consider. The first would be conventional financing. Many financial institutions still offer mortgages to non-permanent residents, but expect stricter requirements, like a higher down payment of at least 5%. Lower debt-to-income ratios, and increased credit scores. Secondly, check state and local programs. Some states offer special homeownership assistance programs for immigrants. Research what's available in your area. Also check with credit unions and community banks. Some of these lenders are more flexible and may have options for non-permanent residents. And finally, financial literacy. Remember, the most powerful thing you can do for yourself is to become financially literate. Learn these principles and put yourself into position to qualify for a conventional loan by learning how to avoid debt. Pay yourself first. Save and invest 15% of your pay. Never co-sign for a friend or a family member. Avoid installment debt on depreciating assets. Forget about the car and focus on the American dream. Stay disciplined and hold your family's vision dear to your heart and in your mind. If you're unsure what to do next, meet with a mortgage professional or a housing counselor to explore your best options, or just comment below. There's no doubt this policy change is a setback, but it doesn't mean homeownership is impossible. You have to become more strategic. So what do you think? Will this FHA policy change help the housing market, or will it hurt aspiring homeowners? Let us know in the comments below. If you found this video helpful, hit that like button, subscribe to American Money 101, and you'll never miss a financial update. Until next time, stay informed, stay prepared, and as always, God bless.